Can you make money when the market is falling? Yes, if you trade CFDs. These are contracts for difference. You don't own the asset itself, you profit from price movements up or down, and the difference between entry and exit prices is your profit or loss. But here's the catch. CFDs are complex instruments and leverage makes the risk very high. Statistically, 70 to 85% of retail traders lose money. And that's not a scare tactic, it's the reality of margin trading. So rule number 1, use a demo account, small volumes, and ironclad risk management. Hi everyone, my name is Igor. I've been trading for over 11 years, and in this video, I'll show you the 5 best CFD brokers of 2026, but with one important caveat: only brokers with mobile and web platforms made the list. In 5th place is Pocket Option. And right away, an important note, this isn't a pure CFD broker in the classic sense. Pocket Option historically became popular for quick trades with fixed outcomes, but it also has a Forex CFD mode where trading works as usual, with leverage, floating profits, and the ability to close positions anytime. The entry requirements are as simple as possible, a deposit from $10 and a minimum trade from $1. This is one of the reasons why beginners love Pocket Option. You don't need to start with large amounts, you can test the platform and the trade mechanics. The web platform itself is designed in an all-in-one style, a chart, a trade panel on the right, and quick buttons. But their specialty isn't technical analysis, but social and gaming elements, built-in chat, tournaments, achievements, and internal gamification. Psychologically, it's really addictive, and that's where the risk lies. People start trading like it's a game, not a job. Now for the main downside, as of 2026, Pocket Option is an offshore platform without top-tier regulation, which means weak legal protection. My conclusion is this: Pocket Option can be considered a platform for starting out and short trades, provided you clearly understand the risks, keep a small deposit, and check the withdrawal rules and availability in your region beforehand. 4th place is Exnova. This is exactly that new wave of platforms. Maximum simplicity, a quick start, and trading right in the browser. No need to figure out complex terminals here. Open an account, pick an asset, set the volume, and enter the trade. The entry threshold is minimal, a deposit from $10, a trade from $1. It feels like Exnova is geared toward beginners and those who trade from their phones. The interface is large, light, and not overloaded. There are basic indicators, moving averages, RSI, MACD, and several timeframes. It's enough for simple strategies, but if you're used to advanced tech analysis, there's no MT5 level platform here. A plus for Exnova is the built-in training. For many beginners, the problem isn't the lack of a strategy, but that they don't understand the mechanics, where to set a stop, how to calculate risk, what leverage is. Exnova tries to address this with tips and mini lessons within the platform. But now about the risks. Exnova doesn't look like a broker with a serious top-level reputation, which means client protection is weaker. The withdrawal reputation is mixed. There are reviews where withdrawing a large amount triggers extra checks, delays, and sometimes freezes. This doesn't mean no one gets their money, but it means you must be cautious and not keep large sums of money there. My conclusion: Exnova is a decent option if you need a simple web terminal and trade small amounts, but for large capital and long-term systematic trading, I'd choose options higher in the ranking. 3rd place goes to Doto. This is a significantly more mature category because Doto is a licensed broker with multiple jurisdictions, including the European circuit. For a trader, this is important. There's oversight, capital requirements, rules for storing client funds, and overall less room for shady schemes. In terms of conditions, entry is also quite accessible. The minimum deposit is $15 on a standard account. There are 2 main formats: standard with a higher spread but no commissions, and raw with a near zero spread but a commission per lot. This is the classic logic used by more professional brokers. Want active trading and scalping? Go with raw. Want calm trading? Standard. The main reason Doto ranks so high among the best web platforms is that their own platform is actually very convenient. TradingView charts, good visualization, built-in news, an economic calendar, plus risk management tips. At the same time, no one forces you to use only that. If you want, you can connect MT4 or MT5. The new platform on its own already covers 80% of tasks. Doto's strengths: transparent conditions, decent support, educational materials, and an overall feeling that the product is built not to entertain, but to retain clients through service quality. There are also some weak points. Verification is almost always required before withdrawal, and withdrawal times can take up to several business days. For a licensed broker, this is normal, plus there are country restrictions. In certain regions, the broker may not operate. It's better to check this before registering. In conclusion, Doto is a great option for those who need a balance of reliability, a convenient web platform, and clear conditions without a casino feel. 2nd place, Deriv. It's one of the strongest ecosystems when it comes to the choice of platforms and markets. Deriv has been on the market for a very long time, and it shows. The product line is huge, with many regional licenses and different conditions for different countries. The main feature of Deriv is the choice of platforms. If you're a beginner and just want to trade CFDs in your browser, you have MetaTrader 5 Web, a clear web terminal without the clutter. If you're more experienced, connect Deriv MT5. If you're a scalper or like the order book and advanced mechanics, Deriv has CTrader. If you're interested in no-code automation, there's Deriv bot, where strategies are built with blocks. In terms of entry conditions, Deriv is also very friendly. A deposit can start from $5 on certain funding methods. Spreads and commissions depend on the account type. Sometimes just a spread, sometimes zero spread plus commission, as in standard ECN models. I'll specifically mention something most don't have: synthetic indices. These aren't real exchange indices, but synthetic markets created by Deriv that are quoted constantly. They're popular with those who trade in the evening, at night, or on weekends, when classic Forex is closed or liquidity is lower. There are downsides too. Deriv sometimes overwhelms beginners with choice. Too many platforms. It's easy to get confused. And second, despite multi-licensing, it's not FCA level everywhere and always, so conditions and protection depend heavily on which branch serves you. My conclusion, Deriv is almost perfect if you need versatility, many platforms, many markets, and the ability to grow from a simple web terminal to professional trading. First place, IQ option. And the reason is simple. If we're talking about web platform convenience and clarity for mass CFD trading, IQ option is still one of the best choices in 2026. Many know IQ option for options, but in reality, they've long had a solid selection of markets via CFDs, Forex, major stocks, indices, commodities, cryptocurrencies, and ETFs. And all this in one interface that's really well designed: charts, indicators, fast trades, and sound visual logic. The entry conditions are as accessible as possible. A deposit from $10 and trades from $1. For a beginner, this is critical. You can start by getting used to the demo, then move to a real account with small volumes and avoid turning learning into a disaster. But it's important to be honest here. IQ option is a proprietary platform without MT4 or MT5 terminals. For algorithmic traders and those used to robots and custom indicators, this is a downside. However, for manual trading, it's a huge plus. Everything is fast, smooth, and without unnecessary technical hassle. Regarding regulation, the model is standard. In Europe, there's the CySec framework, and outside Europe, an international structure with different rules. As for the nuances, a direct transaction fee is usually not charged. The broker doesn't send your trades to the real market, which means all trading happens within the platform. In conclusion, if you need the most convenient web platform to jump in and trade with a low entry threshold and a clear interface, IQ option is deservedly number one. And a little bonus: SabioTrade. This isn't your typical CFD broker, but more about prop trading and funded accounts. You pass an assessment, and if you show consistency, you trade with the firm's capital. For disciplined traders, this can be a great alternative to deposit brokers, but read the rules: limits, drawdowns, profit targets, and withdrawal terms. The details are everything there. Simply put, if you can show good, steady results in CFD trading, SabioTrade is ready to allocate up to $200,000 to you. After qualifying, you'll be able to receive up to 90% of the profits from your earnings. That's all I have for now. If you found this video interesting or helpful, then don't forget to subscribe to the channel. I post videos of my trades, broker reviews, and educational videos right here. Thank you all so much for watching. Good luck with your trades, and see you soon.